Hello viewers. So today I am presenting a class another problem of cash flow statement. So cash flow statement. So in the preceding class I solved one problem, cash flow statement. So today I am solving the second problem of cash flow statement. So importance point of view of board exam. Have a look of questions on the screen. So from the following balance sheets of Vivek Limited, prepare cash flow statement. So particulars, note number 31st March 2024 and 31st March 2023. So again from 2023 to 24, the direction of changes of cash is to be analyzed. That is the balance from 2023 to 24. It's a moving up or moving down, that we have to analyze, and then the same will be presented through a cash flow statement format. So that is the movement of cash inflow and cash outflows can be checked by comparing 2 years figure. So the preceding year 2023 and current year 2024. The position of 2023 to 2024, in which direction it is going up or it is going down. So share capital, if you see that it is from 2023 to 24, its value is going up by 40,000, the difference. Similarly, revenue and surplus, from 50,000 it became 1,52,000, increasing by 1,02,000. The amount of reserve and surplus increased by 1,02,000. In the year 2023, the balance of trade payable was rupees 23,000, and in the year 2024, the balance of trade payable becomes 5,000. It means during the year 18,000 rupees amount paid to trade payable creditors, rupees 18,000, and the balance left is still 5,000 to pay. And short-term provisions. In the year 2023, 27,000. In the year 2024, it became 35,000. 8,000 amount is increased. So in the year 2023, short-term provision balance was 27,000. But in the year 2024, this balance increased to 35,000. So additional 8,000 rupees transferred to this balance out of profit and loss account. So that means the amount of profit and loss account is decreased by 8,000 because of that amount transferred to short-term provisions. So short-term provisions are created out of profit and loss account balance. That is why this amount affect this the amount of this account getting the effect in profit and loss account by adding this, because this amount reducing the profit and loss account balance, but the amount is not going anywhere, so it is a non-cash items. So then the total of the liabilities side, the first column is this 4,82,000 and the second column is the total amount 3,50,000. So next, assets part of the balance sheet. So non-current assets. So non-current assets having fixed assets, and again fixed assets subdivided tangible assets. Now under tangible asset, the balance is showing 1,50,000 and 1,40,000. So here the balance is increasing, and remember that non-current assets items are always the part of investing activities. Then the share capital portion is always financing activities, and non-current liability is always a part of financing activities. So the items appearing in the non-current liabilities we transfer to financing activities, and similarly the non-current assets items we transfer to investing activities, whether it is a tangible assets or non-current investment. Intangible assets sometimes we transfer to investing activities, sometimes we transfer to or non-operating activities under non-operating expenses. It's a depends on the it's a depends on the position of the question. So here from 2023 to 2024, if the balance is a decreasing, then we transfer under non-operating expenses. If the balance is increasing, then we transfer under investing activities. And the current assets also part of operating activities. Current assets are the part of operating activities, so we will take under increase or decrease in current assets, current liabilities heading. Except cash and cash equivalent and short-term marketable securities, we consider that absolutely liquid assets, and they are cash and cash equivalent. These items are treated cash and cash equivalent, not as current assets. So the cash and cash equivalents at the bottom of the solution. Opening, so 15,000 would be the opening balance and 17,000 would be the closing balance. So next, the notes to account, as I explained you in my preceding video class. So if you had watched that video class, so this will be very helpful to understand. Now this is the notes to account. This is the certifying the balance sheet, certifying the question, the items which are appearing here in the balance sheet, that is the question. So this is the, we can say that this is the notes to accounts is nothing but an explanatory part of the question. So now share capital, when we see the notes to account under share capital, so it implies that the company is having only the equity share capital. Company has no preference share capital. So this is clearly indicated that by stating through the notes to account that company is having only equity share capital. And then now what is the reserve and surplus balance left in the company? So it represents only the profit and loss account. In the reserve and surplus, number of items might be like security premium, general reserve. So these items are not mentioned under the reserve and surplus. So it is very clear that the balance which is showing by the reserve and surplus, it is only the profit and loss balance, that is the surplus balance. And now short-term provision, so there might be so under the short-term provision, what is the items? The short-term provision, provision for taxation. In this short-term provisions might be proposed dividend or dividend payable is also come under the short-term provision. Provision for doubtful debt, sometimes we can write under the short-term provision. But here provision for taxation means, so now according to this information, we have to give the treatment of this item. So provision for taxation, only having this item under the short-term provision. So tangible assets, the company is having what type of different what are the different types of tangible assets. So here it is showing building and plant. So on the face of the balance sheet, so we get only 1,50,000 the total value and 1,40,000 the total tangible assets, indicating that what are the different types of assets available in the company. So it is showing that the notes to account. Building, value of building is closing balance 80,000, opening balance 1 lakh. Similarly plant, closing balance 70,000, opening balance 40,000. Tangible assets, company is having, it has no furniture, it has no other motor vehicles. Intangible assets, so intangible assets might be goodwill, might be trademark, might be copyright. So here the intangible assets is having only patents. It means it has no goodwill, only patents. So patents, goodwill, copyright, if these are the decreasing from opening balance to closing balance. So from 2023 to 2024, the balance is decreasing by 10,000, it is written off. Oh, now the balance 20,000 will be written off in the next few years. So, and when this type of items is writing off against the profit and loss account, then this is a balance by 10,000, the balance of profit is decreasing, so that the cash that is not equal to that amount is not equal to cash balance of profit and loss account. Since this is a non-cash item, non-cash items is not involving the cash outflow. It is simply reducing the balance of cash. So that is why we add back as an non-operating expense. Apart from this, the additional information: depreciation charge on plant rupees 30,000, building 50,000, income tax paid during the year rupees 25,000. Since the income tax paid during the year is given here and there is a provision for taxation, that means if we have to prepare one working notes, that is the ledger account, to find out the effect, what is the amount being transferred to provision for taxation from the profit and loss account. Now the solution: cash flow statement of Vivek Limited for the year ended 31st March 2024. So the first heading, cash flow from operating activities. So net profit after tax, the profit and loss account balance 2023 amount is 50,000 and 2024 amount is 1,52,000. The amount of profit is increased by 1,02,000. The difference of these two value, 1,52,000 minus 50,000, 1,02,000. Then provision for taxation. So this we got this value through working notes. The value obtained provision for taxation, it is shown by working note number 3. After the solution, I will show you this 33,000. After adding this 1,35,000, this is the net profit before tax. 1,02,000 plus 33,000. Add non-operating expenses. So it is given in the question: depreciation charged on plant rupees 30,000. So it is an additional information, 30,000. And similarly, depreciation on building charged 50,000. It is given in additional information. So this is a non-operating expenses, depreciation, and it should be added with under non-operating expenses. And intangible assets related is patents. The value of intangible assets is patents. So it is a decreasing from 30,000. In the year 2023 it was 30,000. In the year 2024, 20,000. So balance, the difference in value is 10,000. So it is written off. And now 1,35,000 plus 30,000 plus 10,000. So total 2,25,000. This problem, there is no items falling under non-operating income, so it is indicating nil. The value of operating profit before working capital changes will remain same, 2,25,000. Next heading is decrease in current assets and increase in current liabilities. If the question is viewed, then no decrease of current assets. So inventory and trade receivable both are increasing, 45,000 to 95,000. From 45 it became 95, increased from 1,20,000 to 2 lakh it is. And let's see the current liabilities. Current liabilities, trade payables from 23,000 became 5,000. It is decreased. Short-term provision, it is considered at the top while calculating net profit before tax. That means there is no item of current asset which is decreased and no item of current liability which is increased. This heading amount is nil since there is no decrease in current assets item and increase in current liabilities item. Next, less, increase in current assets and decrease in current liabilities. So this heading having the item trade payables is decreased 18,000. Trade payables is in 23,000 in the year 2023 and 5,000 in the year 2024. So trade payables is decreased by 18,000. It means this is the amount payable. So during the year 18,000 amount is paid, hence cash outflow. So when cash outflow, it is minus deduction. Similarly, inventories increase, so additional inventory purchase, cash outflow. Trade receivable increase means from the cash flow statement point of view, additional cash given trade receivable customers. Trade receivable increased means from cash flow point of view, the additional amount of cash given to various customers. After giving the effect of minus, here 2,25,000 minus 18,000 minus 50,000 minus 80,000, the balance is 77,000, and this is cash generated from operation. Thereafter we have to deduct the tax paid. So it is given in the additional information, tax paid amount is 25,000. So finally the balance obtained, cash flow from operating activities 77,000 minus 25,000, it is 52,000. So net cash flow from operating activities 52,000. So thereafter the next heading, cash flow from investing activities. Under this, non-current assets, items appearing under the non-current assets are transferred under the heading cash flow from investing activities from the balance sheet. So the purchase of building, working note number 3, rupees 30,000, and purchase of plant, working note number 2, it is 60,000. So purchase means cash outflow minus. So total cash outflow under the investing activity is 90,000. Now let's see the cash flow from financing activities. So under this heading, as per the questions, only one item, issue of share capital. So non-current liabilities items also appear under this heading, but in the given question, non-current liabilities items are blank. So there is no monetary values under the heading non-current liabilities. So it is having only the issue of share capital, that is the issue of share capital increased. Share capital from 2023 2,50,000 to 2024 it is 2,90,000. So during the year 40,000 value of shares issued and cash inflow is 40,000. So we have three values in the second column, 52,000, 90,000, 40,000. So two are plus item, one is minus item. So let us do it first. 52,000 plus 40,000, 92,000 minus 90,000. So balance is 2,000 positive. So it is net increase in cash and cash equivalents 2,000. Then add opening balance of cash and cash equivalents 15,000. The cash and cash equivalent balance given in the question, it is 15,000. So add this balance with net increase in cash and cash equivalent. So 2,000 plus 15,000, total 17,000. So 17,000 balance indicating closing balance, that is the cash and cash equivalent balance appearing in the question under the column 2024 is 17,000. So exact value we got here 17,000. Alright, so this is the net increase in cash and cash equivalent calculated. 52,000 plus 40,000 minus 92,000. So balance 2,000 positive, and this is 2,000 net increase in cash and cash equivalent. Now here plant account. So regarding the preparation of plant account, ledger account is to be prepared in this manner. Now plant account working note, opening balance 40,000, that is the balance of 2023 31st March, and depreciation is given in the adjustment rupees 30,000. This is 30,000 depreciation credit side, and closing balance always credit side. So closing balance is 2024, balance 70,000 given in the question, plant value. So then the 30,000, 70,000, 1 lakh, and this is the value is calculated. This is the bank account balancing figure, means it is calculated. So 1 lakh minus 60,000, 40,000. So this is the plant purchase, and it is given under investing activities, purchase of plant. This is 60,000. In the same manner, building is calculated. Opening balance 1 lakh, and depreciation is provided 50,000. Closing balance is given 80,000, and the difference is 30,000. It represents purchase of building. So credit side is greater than debit side. The difference represents purchase. If debit side is greater than credit side, then a difference represents depreciation. So next, provision for taxation. Here since provision for taxation liability, so opening balance started in credit side. So 27,000 the balance value given in the question to of 2023 March 31st. It is given provision for taxation 27,000. Closing balance here, this one 25,000 given. Tax paid is written debit side always. So tax paid amount given in the adjustment 25,000. Then the totaling 60,000. So the debit side is greater than credit side. The 33,000 is calculated value. The difference 60,000 minus 27,000. The balance is 33,000. And this is the amount transferred from profit and loss account, and this amount is added to net profit after tax balance. Added to balance net profit after tax, then the value obtained is net profit before tax. Well viewers, all of you watch it, do like, shares and give comments and practice the problems. Thank you.